Hello everyone and welcome to this special edition of Business Day Millennial Hangouts. My name is Ethel Adonu, a social media strategist here at Business Day, and today I am honored to be your moderator for today's important conversation. Our theme for today is return on investment in real estate. When we talk about investing, most of us immediately think about stocks, crypto, or maybe that side hustle we have been passionate about. But one investment has stood the test of time across generations is real estate. Unlike many other assets, properties is tangible, you can see it, live in it or rent it, and over time it often appreciates in values. So still for many, the idea of buying land or property can feel intimidating. Now questions like, do I even have enough to start, or isn't real estate just for the wealthy often come up? And that is why, as always, Business Day is bringing this hot topic straight to you today. And in today's conversation, we will be exploring what return on investment is in real estate, and then why it matters and why young people need to start seeing it as an opportunity. So I am not here alone. I have got brilliant speakers here with me, and it will be my utmost pleasure to introduce them to you all. Thank you for joining this program today, and it promises to be an exciting one. Now, joining us today is Fatima Aderibigbe, Head of Sales and Marketing, HH Holdings Group. Thank you for joining us, Fatima. We can't wait to hear what you have for us today.
Thank you for welcoming me. I really appreciate
it. Yeah, thank you. Also, to join us is Moses Mogbolu, a strategic business leader. Thank you for being here, Moses.
Thank you so much for the opportunity, and I look forward to more interaction.
Thank you. We also have Imelda Usoro, founder and CEO, Think Mint Nigeria. Thank you for joining us today, Imelda. Okay, and we have also Oluwakemi Adeyemo, a real estate investment advisor at Future Perfect Limited. Thank you for being here, Oluwakemi.
I think I had. Thank you for welcoming me. Sorry, yeah. I had a bit of a glitch.
Thank you for being here, Imelda. Okay, so thank you all for joining us today. And of course, we can't wait to hear what you have for us today. They have got insightful and brilliant knowledge to share with us today. So your only job is to sit back and watch them while they do justice to the topic. So we'll be going straight to the Q&A section, and I will be taking it in no particular order. I'll be calling them and then asking them questions while they provide insights to it. So I would like to start with Fatima. As a head of marketing and sales, I want to ask you this question: how is return on investment calculated, and in relation to real estate investing? I will take the question again: how is return on investment calculated in relation to real estate investing?
Thank you very much, Ethel. Can you hear me clearly?
Okay, let me take it again. How is return on investment calculated in relation to real estate investing?
Okay, returns on investment is calculated in various ways and for varying reasons. So if it was rental, basically we'll say returns on investment is net profit divided by your total investment times 100. But if it was for residential or for rental, what is going to be is like your rental annual rent yield minus your cost. You know that if you have a property, it's either you pay taxes, maybe your land use charges, you've done some maintenance, you've done some property renovation, you subtract them from your rental price. So if, for example, I bought a property at 50 million and I'm renting at 6 million naira, and my total cost of expenses, tax payments, and all these things is about 1 million naira, So my net profit is 5 million naira. So that would be about 10% ROI on that transaction. If it was for sales, especially where I'm buying to flip, and I'm buying, so I'll look at what is my purchase price? How much did I buy the property? Was there any improvement, any charges that I paid? Maybe title documents verification, what it is that I added. So what it would be, and if there's any renovation. So for example, if I bought a property at 25 million, 20 million, sorry, and my cost of documentation and all this is about 5 million naira, and I sell at 30 million naira. So my gain or my net profit is about 5 million naira. And so that is also about 20% returns on investment thereabout. Again, you could also use, some people use tax benefits, mortgage, to calculate it. You could also use this cap method, depending on your investment. So if there's any mortgage that you have taken into consideration, which you also add, if there's mortgage, you add, if the depending. So there are various reasons. Sometimes people use net operating income, depending on the kind of investment that you are measuring. So, but the basic is that whatever it is, whatever your net profit is, divided by your total investment times 100 will give you your returns on investment in that area. Thank you.
Thank you so much, Fatima. That was brilliant. Thank you. It was really a detailed way to calculate ROI. Thank you. So my next question is for Moses. As a business strategic business leader, what are the key factors that affect ROI in real estate? I will take it again. What are the key factors that affect return on investment in real estate?
Thank you so much for the wonderful question. I believe the audience can hear me clearly, because when it comes to investment in real estate, the return on investment is very, very important. Because I always tell my clients there are what we call opportunity costs. So if you are not investing in real estate, what else do you need to invest? So in looking at the key factors that affect your return on investment in real estate, I always tell people, location, location, location. The location of your property is very, very important, even far beyond the property type. So let's take, for instance, if you check the rental value of property in places like Ikoyi, Victoria Island, Lekki, versus the rental property in Ikorodu, Songota, or Ibadan, the difference is very clear. So think about location first. Then number two, you think about the property type. What am I going into? Is it a short-let apartment, or is it a traditional long-term renters? This also ties back to location. If my property is in a place like Lekki or Ajao Estate, where many travelers need to stay overnight, have some parties, short-let will help me to get faster return on investment rather than long-term renter. Another factor you also consider is what is the infrastructure around that property. If the property have a proximity to key commercial hubs, like you talk about the Dangote refinery, talk about the Lekki Deep Blue Sea, you talk about Ubudu Cattle Ranch, the more infrastructure within that facility, the better the return on investment. Another key factor I would say you should look out for is the market condition. What is the current inflation rate? What is the current exchange rate? What is government policy concerning housing? The new tax system has been approved. How will this affect my property? So at any point in time, think about the location, think about the property type, think about nearness to infrastructure, and ask yourself, what is the market condition? There are many factors, but for me, these are the four critical factors anyone going into real estate investment to think of when it comes to return on investment. Thank you.
Thank you so much, Moses. That was a detailed one. Thank you for spotting out the factors to look out for in real estate investment. I know you mentioned a lot of factors, but I want us to look deeply into the location factors. So my next question is for Imelda. As a founder and a CEO of a real estate company, how does the location of a property impact return on investment?
Okay, so I'm taking up from where Moses stopped and what Moses has said.
Okay.
Location is actually very key, right? Because depending on where you buy your property, there are two sides to it. One side is current value of the property in a particular location. Because in real estate, there are two types of locations, right? There are already developed locations and then upcoming locations and areas. And there are downsides across both, and then there are also upsides across both. For already developed locations, you can get your maximum return on investment instantly. I mean, you buy your house, you can sell it at the going rates there, especially depending on how you enter into the market. So for instance, if you enter off plan, you get the property at a lower rate, you can sell it at the going rates in that area, and which is usually very high compared to the upcoming locations. Now, buying a property in an upcoming location also has its own advantage, because if you keep it for a while, you can also get maximum returns on investment at the time that that location gets to its peak as well. And the good thing about those areas is that peak time is something that is never ending, right? Because it's as the infrastructure comes into the area, as new amenities comes there, and the area develops more, value of property in those areas also increase over the years. So you can actually get maximum returns on investments in upcoming locations. That's one side of location strategy in buying a property. Another thing is there's also demand, the aspect of demand and supply. So already developed locations, people tend to demand for properties in those areas more. So of course you can sell faster. If you invest in, for instance, maybe in Lekki, you can tend to flip faster because there's always high demand for those locations. But upcoming locations, you may not get substantial demand in those areas. So you have to be patient to wait for when demand will come, which usually comes over the years, right? Once there's amenities, like I mentioned, infrastructure and development in those areas. But most importantly, you need to understand your net worth and what you can afford, right? Because that's also very important in property purchase. You need to understand what you can afford. If you can afford to buy from an upcoming location, remember that when you wait, you would also get your maximum returns. And if you can afford to buy in a developed location, also know that you also have your buyers already ready to transact and buy in those locations. So there, like I mentioned, there are downsides, and then there are also upsides to buying from or in a developed location and an upcoming location or underdeveloped. I don't like to say the word underdeveloped because at the end of the day, there is potential for even an upcoming location. I don't know if you heard me.
Yes, I did. I thought your network was glitching at one. Okay. Thank you so much.
Okay, yes.
Are you done?
Yes, I'm done. And I think.
Okay. Thank you. Thank you for doing justice to the question. What I see from what you said is more about doing due diligence before investing. So that will take us to the next question. And my question is for Oluwakemi. As a real estate investment advisor, what is the importance of due diligence in real estate investing? I know there are a lot of people, out there ready to convince you, come and buy property here and there, but the importance of due diligence cannot be overemphasized. So what is the importance of due diligence in real estate investing.
Hi everyone. Good afternoon.
Good afternoon. Thank
Sorry,
you.
but I think my network was a bit off at first, so it threw me out. So I'm unable to catch most part of the conversation.
Oh, thank
Can
you.
you reveal me your name, please?
Oh, my name is Ethel Adonu.
Okay, Ethel. Thank you for the question.
All
Well,
right.
due diligence is a hot topic when it comes to real estate investing in Nigeria.
Yeah.
I mean, even in other parts of the world, right? So I used to say that the success or the failure of your investment in real estate rests heavily on the detailed due diligence that you do or that you do not do before putting your money in real estate in Nigeria. So recently, statistics says that according to the Nigeria Bureau of Statistics, that real estate has added to Nigeria's GDP. Somehow they say it has even surpassed what we make from oil, right? And the reason that is because number one, population is increasing. We have limited land mass, and thanks to the diaspora, Nigerians in diaspora, they are investing back home. So demand keeps getting higher and higher by the day. And we also have a demography of young people who are looking to also enter into the real estate space, either to preserve money or just to make money or even just to own a home, right? So, and because of that demand, that also means that chances are higher that people will want to skim you out of your money. Chances are higher that people will want to, play a fast one, play some games, because we have a lot of people come into it. So I like to give this example that if you pour sugar in a particular location, before you know it, you see ants, right, swam over that sugar because it is attractive to them, right? So real estate has recently become attractive. So chances of being scammed and skimmed of your money is equally high. And that is why due diligence is very, very detailed. And I also tell investors that you yourself need to be informed on what due diligence in real estate means to you. Because due diligence means different things to everybody, right? So there's legal due diligence, there is financial due diligence, there's location due diligence. In fact, I added one to say that there is emotional due diligence, right? There's even technical due diligence. So you may actually be buying a property that may not serve your purpose because maybe some things were not checked, right? So due diligence is very, very critical. But more important is what every individual sees as due diligence. So let me give an example again. Sometimes when people want to do due diligence, they say, oh, they sent me a survey, or I went to coordinate and I sent it to somebody in somewhere in a ministry of lands and so on and so forth, and they said it's okay. So in my head, I'm like, it's okay. What exactly is okay? What exactly does being okay mean? Right? Some people also think that once they say, oh, this property or this land is free from every known government acquisition, they feel, oh, okay, that's due diligence has been done. But no. So due diligence will be structured based on that particular asset, right? Due diligence should be structured based on that particular asset. So what that also means is that I might have two buildings standing side by side. Now, the nature of due diligence I will conduct on building A is not going to be the same. It's not going to be all the same as what I will do as due diligence on structure B. Because the dynamics of the transaction of property A is not all the same as the dynamics of the transaction of property B. So due diligence makes or mar your return on investment. You may actually be eyeing return on investment and say, okay, I'll make 30%, 40%, even 100%, because yes, I've seen 100% in about 12 to 18 months before, right? You may have envisaged you will make that much, but if your due diligence is faulty, it erodes that high return that you may have seen. So due diligence is very, very sacrosanct when it comes to making good return in real estate in Nigeria. I hope I answered your question.
Yeah, you did. Thank you so much, Oluwakemi. Thank you for the robust explanation. Thank you. So that will bring us to like the next question, and that will be for Fatima. As an experienced sales and marketing person, how does return on investment in real estate compare to other investment options? I mean, there are a lot out there. So how can we like compare the one for real estate and other investment options?
Thank you very much, Etienne.
Thank you.
So if I'm going to compare, and I say for real estate, I will compare with maybe treasury bills or equity. Treasury bills can yield about 17 to 18% short term, but is risk free. Equity varies widely between 10 to 20%, but also very volatile. Crypto can yield about more than 50%, extremely risky. When it comes to real estate, the truth is that real estate could be a bit slower, and it might not yield as much as you think. Real estate, like every other person has said, you need lots of patience. Real estate in Nigeria, for prime areas, you can get between 6 to 12% annually. Lagos and Abuja, for short legs, you can get between 10 to 20 thereabouts. REITs, which is real estate investments, can give you about 5 to 8%. But one good thing about real estate investments is that it's stable. It is very stable and it is asset backed. So, and it also provides an edge against inflation, which most of these financial instruments cannot give you. So what it does is that it can enable you to get a cash return and you still get a physical asset depreciation. That is what real estate can do. Not as high as I've mentioned all these treasury bills are, but one of the safest thing about it is that it is that just like the last speaker said, there's quite a lot of demand. And you know, where you have demand, what it does is that it forces the price up. Quite a lot of people, the shortfall for housing is enormous and it's very large. And that means that there's a lot of players who can come in, foreign investors who can come in and who will be able to do it. So real estate would be lower. But again, like we always said, looking at the driving force for real estate investments, if you're in a very good location, please mention even places that you don't think about, like Ajao Estate. One, because of its closeness to the airport, you find that people will prefer short-let accommodations to those areas. So when you divest and you are very careful about the locations where you are getting your real estate, you can maximize your returns on investment as large as. Not only do you get cash back, and if you want to sell or you want to use it as an asset, it's also a very short form. So it's very stable, but it's also, and it appreciates in time. One thing about it is the process of demand will always force price up. And as the price goes up and you continue to maintain your property and keep it in good order, you ensure that it matches whatever it is the demand at the moment. I know the diversity of real estate is again is that you can flip, you can switch. So I do short let this year and I find that short let demand has dropped and I switch to long lease. So it's very diverse and it's very stable. Thank you.
Thank you so much, Fatima. Thank you for buttressing that last part of the diversification opportunities in real estate. You don't just focus on buying only land, or maybe you just want to buy a property. You can also invest in short-let and other options. So, but you spoke about maximizing return on investment. That will like take us to the next question. Let's take a look at it real deep. So that will be for you, Moses. What are the most effective strategies? As a business strategist you are, what are the most effective strategies for maximizing return on investment in real estate?
Thank you so much. I really enjoy this question because it's what I do on a daily basis.
Wow.
I always tell clients, strategy is key. What is your game plan? My game plan will not be your game plan, and your game plan will not be my game plan. But before I dive into the strategy, I want to just put some statistics so that our audience will understand that strategy does not come up first unless you understand the market clearly.
Yes.
Looking at 2025, for instance, the projection of real estate market in Nigeria will worth $2.25 trillion US dollar. If you look at the growth potential, 2024 versus 2025, we are going to 8%. Now, if you look at Nigeria as a map, I have 3 places I call the hot spot, like Ibadan. Ibadan appreciation is projected to be at 15% annual land appreciation. If you look at Lagos, especially the Ekpe area of Lagos, is projected to have about 20% return on investment because of the boost in Lekki-Ekpe corridor project. Then if you go to Ogun State, because of the industrial hub, there is potential of 18% growth. Then look at the whole strategy. What is driving this investment in real estate? Yes, population is part of it, but there's diaspora investment and short-term letting booming currently in Nigeria. So having this at the back of my mind, how can I maximize my return on investment in real estate in Nigeria? First, think about what is my game plan. Is it short-term, medium-term, or long-term? If my game plan is on short-term maximization, I have to think about short-term renters. And when I think about short-term renters, where should my mind go to? The urban area, the tourist zone. Just like the last speaker mentioned, if I have a short let in place like Ajawa Estate, there is tended that many people are traveling all the way from Imo State, connecting to United Kingdom, connecting to Canada, and they may have to stop by in Ajawa Estate for some time before traveling. Now, if I'm thinking about strategic growth, I have to invest in undeveloped or developing area that, please remember that caveat, that have growth potential. Because when I started real estate about 18 years ago, I burnt my hand. I have that projection from the people already in the system that Ikorodu have a growth potential. And I invested into Ikorodu area, directly back of Lucky Fiber. But as we speak, the growth potential is still very low, like 2%, which if I calculate the inflation already eating over my growth potential. So always be very sure that the underdeveloped area does have a growth potential. If it does, invest now. Don't wait till tomorrow. That is for strategic growth. Then for expanding or looking at a city hub, think about renovation and flipping the property. Let's take old properties in Yaba and Surulere area. Because of nearness to Yaba Tech and Polytech and the University of Lagos, there is tendency that if I flip some of this property, renovated them for student use, I'm going to have constant rental income. Another strategy that you can use that many people don't think of is what I call leverage. Every rich man, every wealthy man you see in the world today understand the power of leveraging. And what is leveraging? Leveraging is all about not focusing on your own capital. Try to use other people's money to invest. And in real estate, this can be done as a strategic way to maximize your return on investment. If you can't do it as a cooperative society, do it as a joint venture, do it as a fund pooling, and come together to make sure that you are not paying any interest rate on mortgage, but you are leveraging your network to build that hub for real estate. So there are different strategies, but for me and this purpose, I will offer those 4 key areas again. Focus on developing area with growth potential. Make sure that you focus on leverage so that you cannot pay more interest on the money. In any time you have about short-term investment, focus on urban areas, tourist areas for short-let potential. Then whenever I think about the city hub, look at opportunity of property that you can renovate and turn to rental income. With this in mind, I'm 100% sure that putting into inflation into consideration, putting external factor into consideration, you will be able to maximize your return on investment. Then finally, never forget the power of monitoring the market, because anything can change. If you don't monitor and there are changes and you still focus on your strategy, there is tendency that what you have gained before as a return, a simple policy or a single change in exchange rate can erode that particular returns. So monitor your market on a daily basis. Thank you.
Wow. Thank you so much. You really broke down the question like a strategist that you are. Thank you. And also thank you for sharing your experience, your real estate experience with us here. And for this first class strategies that you gave us today. Thank you, Moses. So talking about still about maximizing your return on investment. This question is for Imelda as a founder and a CEO of a real estate company. I know you do a lot of property management. So that brings us to the next question. What role does property management play in maximizing return on investment? Should I take it again? What role
No, I
does...
heard you. I heard you.
Okay, thank you.
Yeah. Okay, so I mean, property management is very key in real estate. It's very important that beyond purchasing a property, the next, and what I always tell people is the major thing is actually what some people understand as facility management and property management, as the case may be, because that is what would retain your assets and determine how much more you can make from your real estate investments. For instance, if you buy a 3-bedroom apartment in Lekki, for instance, remember that there are new projects coming up every time also in those locations. Now, if property management is not well handled, you realize that you would actually, when it's time for you to, maybe you want to sell or even put it up for rent, depending on whatever real estate investment strategy you choose to take. If property management is not properly handled by both by the buyer or the owner of the property, it could actually depreciate or cause a depreciation in your return portfolio. And so that's why it's very important to maximize property management to its potential. And ways that you can do this is by working with with property management companies to ensure that your facility is in check and it's well maintained. Because lots of time, many times, we also have issues with management here in our part of the world, right? And so because of that, we realize that these buildings depreciate in value because of lack of proper management. And at the end of the day, you realize that your assets, yes, you can actually earn so much from it, but when you check it, when you weigh, when you compare it to the current value in the market, you realize that you cannot meet up with it because of the state of the property at the time that, when you compare when you bought it and the time that you're looking to flip, for instance, if you want to flip. So that's one thing that every property owner should consider deeply or greatly in maintaining their returns and maintaining their assets when you have purchased a property.
Thank you. Yes, thank you so much, Imelda. Thank you for breaking down the question. So I just want to quickly take us back to one point that Moses mentioned. He emphasized more on leveraging. So that's will take us to the next question. And that will be for you, Kemi. How can investors use leverage to increase return on investment in real estate?
Okay, thank you for that question. Speaking to leverage. So real estate is one of the asset class that you really can leverage. Leverage. So Moses talked about doing joint venture or pulling resources together to invest in real estate. Because again, based on your either short-term, mid-term, or long-term goal, right? That determines where you invest in, whether you want to do areas that are developing with potential for growth, or areas that are just emerging, or areas that gentrification is going on, or areas that are even booming, right? So if you have a short-term goal, for instance, right, say 12 to 18 months or max 2 years, you want to enter and exit. To be able to maximize return in the short term in that type of market, say for instance, where gentrification is going on, places like Yaba, Surulere, Ogudu, as we have it now, that you have all these olden days plots. I call them olden days plots because they are far, far different from what we call plots these days, right? So in some areas like Ogudu, for instance, Ogudu GRA, you have plots of 1,000 square meters and even more, and you will probably have one house on it, one mansion sitting on it. So it could have been zoned back then for low to medium density homes, right? So, but now we have population increase. People want to live in some certain places and they want to feel secure. So some of those plots are now being redeveloped, right, to have multiple family units or to have multiple apartments, right? So if you want to invest in that type of a market, again, after doing all your research and you look at it, so for instance, houses in Ogudu are currently selling for north of 340 million. As a millennial, you may not be able to cough out an entire 340 million. So this is where leverage comes in. You can leverage on community, you can leverage on single digit mortgage loan. I'm very careful to say single digit mortgage loan, right? So you can leverage on those types of loan. I think we now have MREF, if anybody just Google MREF, you'll be able to read more about that. So you can leverage on those single digit interest to invest in certain types of markets, right? You could draw down on facilities that will not erode your return on investment, right? You could pull people together, people of like mind, pull resources together with a clear goal of entering that market and exiting within a short term. Now, exiting within a short term could also be dicey, like Moses mentioned earlier, because if your calculation and your research is not sound, if you do not understand the market that you're putting your money in at that point in time, your money may be sitting in the market beyond the period that you actually want to pull out your money and to gain return. So your research is very, very key. Your goal is very, very key. Your period is also very, very key. And the time you're entering the market. And I tell the people, my clientele that I advise, that see your exit before you enter. You have to see a clear exit of your investment before you enter. It doesn't necessarily mean you have to exit, right, at maybe whenever you pen down that you wanted to exit. You could leave it, but you must see the exit. You must see a possible exit before you enter the market, right? So, excuse me, with that, leverage even becomes easier, right? So when you can clearly state that, okay, I can exit this way, or I can exit this investment this way, it's easy for you to convince other people to say, okay, let's pull resources together. And why I speak more to pulling resources together is because the cost of fund is almost zero. So if you take single digit in mortgage, you still have to pay some interest every month, right? Or sorry, every year. And you have to take from your money, your income, your salary to pay down principal and interest. But if you can build a community of like-minded people who are investment driven and focused, you can leverage on OPM, other people's money. You pull resources together, you do your research, you put legal structures in place, you enter that market, you exit, you you take a chill pill till the next opportunity presents itself. And I mean, I've seen that happen a lot. Especially in Lagos market, Lagos real estate markets. I hope I've been able to speak to leverage.
Yes, you have. Thank you so much, Oluwakemi. Thank you for even highlighting some of the real topic, even as how to leverage your communities and even leverage loans before if you're finding it difficult to raise up capital for your real estate investing. Now, let's even take a look about the risk associated with real estate investing. So that would take me to Fatima. This question is for you. What are the potential risks associated with real estate investing, and how can they impact return on investment?
Thank you very much. And like every investment, you have your risk, you have your benefits.
Yeah.
And like the last speaker said, you need to be careful. You must have a strategy, your entry strategy, your exit strategy. And like we've always said, real estate is very diverse. You can exit, you can enter. And even while you're in there, if there are challenges, you can diversify. So first, I'll look at the title fraud. The title fraud is one that is very important. The last speaker said, title verification is much more than going to the land registry to check and see whether there's no encumbrances regarding the property. There's quite a lot of things that you have to look at. Proper documentation. Also ensure that even if they are community lands or fully lands, they are well verified. Look at the land. What kind of soil does it have? What kind of zoning plan does the government have in that area? There are some areas that are really designated for industrial. You buy the land, you want residential in there, and you begin to find that there's a lot of issue. Or you see that whether the area still has a certain level of development that will go on there. Also, another thing is supply in the market. This is another potential risk. Everybody is building. And when you get to some areas in Lagos, what you just find is lots of development going on and nobody occupying or anybody buying. So one of the first thing is to understand. You have to first understand the demand in the market. If the demand far outweighs the supply, then it's good to go. But when you have oversaturation, there are some areas where you have oversaturation of short-let apartments, and you find some people that are measuring vacancy rates. Vacancy rate is high. So one of those things will also erode your return on investment. So proper thing is proper search. Before you begin to invest, whether you are investing in form of bricks or short-let, check what the supply is in that area and the demand. So whatever it is, if, for example, I started with short-let, and I see that the supply of short-let has been eroded in the market, or the supply is that much, I can switch to long-term. I can begin to earn my rent annually. Another thing is construction cost escalation. Unfortunately, we have no control over that because of when inflation, interest rates, and as such. So that one's also, that's another potential risk. But one good thing is that especially when you're an investor or you are working with a developer, one of the things is that you can lock down construction prices in contracts. You can find a way to lock them down. We have some people that when you are doing construction, it is expected that if you are doing construction on large scale, you already lock down prices with some of your vendors. You have them supply, or you talk about costs even before you do that. Another thing too is regulatory risk. You have to make your findings, dot your I's. So what is the approval rate? What is the assessment rate if I'm building a duplex? What is it if I'm doing a multi-level property? And again, economic shocks. Those ones, when it comes to inflation, interest rates, these are other factors too that can also influence or whether make or mar your ROI. When inflation is high, what it does is that there's capital appreciation on your property and demand. If interest rate is high, what it does is that it reduces. It reduces, even mortgage becomes high. People don't want to leverage on mortgage to buy houses. So again, inflation, if FX is down, it means that there's a lot of foreigners entering. So you find demand for properties. So liquidity risk is another one I would like us to consider, even for real estate. Liquidity risk to economic shocks. If you have FX swing, what it does is that it increases your costs and it lowers the affordability of houses for people. This among others, but like I said, documentation and title risk, especially when you want to flip a property and you have a wrong title, that is the worst mistake any investor can make, because what it does is that it reduces the value of your investment. Thank you very much.
Thank you so much, Fatima. Thank you for explaining the questions. I think one of the things that stood out for me was when you explained the risk around short-let investing. Because I know shortlist is one of the areas in real estate that it has been attracting a lot of investors. And that will take us to the next question, because I get to see people who invest in shortlists that are not in a good areas. And what comes to my mind is, how were they able to convince them, and how do they even go about their return on investment, knowing that people don't really come to those properties? So over to you, Moses. I know you will do justice to this question. How can investors mitigate risk and protect their return on investment in real estate?
Good question. I think for this particular question, we put a bit of Canadian context to it too, so that I'll have a clearer perspective, because when it comes to real estate, I invest both in Canada and in Nigeria.
Wow.
Any business without risk, I will tell you, don't go into the business. Because normal portfolio management, we know the higher the risk, the higher the returns. And if you want to totally avoid risk, that means you're not ready for business. So as a real estate investor, as a millionaire that really want to focus on investing in real estate, how can you mitigate some of this risk? Yes, some of our panelists have talked about your due diligence, which is good. Some of our panelists have talked about the role of property management, which is also very good. I just want to add few things. That first, your objective should drive all you do when it comes to real estate. And the market context is very important when it comes to risk mitigation. But in all, have it at the back of your mind that if I have a lower risk, I'm going to have a lower return on investment. If I have a higher risk, I'm going to have a higher return on investment. Like we mentioned, the booming area, which is short-let. Short-let currently is booming, not just in Nigeria, in most parts of the world, even here in Canada. But the question is, does short-let have a stable return on investment? Because when it comes to business, cash flow is very important, because cash is king. And whenever your cash is tied down, it can lead to liquidity crisis. Like one of our panelists mentioned, the importance of liquidity when it comes about risk. So if I'm focusing on short-let only, indirectly, I am very, very close to high-risk investment. And as a strategist, I will always advise, no matter how good your goal is, always try to balance your portfolio. And what do I mean by balancing your portfolio? If my goal is to maximize my investment, I have to ask myself the question, short term, long term, strategic term, what do I need? At the short term, I allocate 30% of my investment into short-let. I also locate my bulk of my investment, which is about 50%, into areas that I know I call the land banking in developing areas, that the property will surely appreciate. While I locate the remaining 20% in normal, standard, traditional property. And what that does is, because my portfolio is diversified, I'm diversifying the risk. If the economic downturn happens and it affects the developmental areas because of lack of infrastructure, or there is a government policy, it's only affecting 50% of my investment. My short-term apartment in places like Lekki, like Ajawa Estate, like Ikoyi is still moving. Now, if I decide to invest in area because there is a premium area and I think I'm going to get money from it, I will tell you the truth. In terms of demand in those areas too, how many target audience are qualified to buy that property in Banana Island, because the demand will not be as high than the massive location. I have to be sure that I have that cash flow that can keep my business before I can make that sales. So first risk mitigation strategy to maximize your investment is diversify your portfolio. There is no standard, but what has worked for me is what I'm preaching. 30% on your short term, 50% on your strategic long term, and your 20% on your working or operational approach, which means that I move with the market. That's my first strategy, and it has been working. Then 2, what markets am I playing, and what are the external factors? Because at any point in time, you are not the only one in the real estate space. More people are coming, more government policy are coming. How can I manage the shock when it happens? That leads me to the area of collaboration instead of competition. We are all in this business to support families, to support business, to ensure there is stability in the industry. So don't work alone. I used to that approach of where your strength is and where my strength is, and how can we see to collaborate. So as a millionaire that's going into real estate, don't think it about competition. Think more about collaboration. Who are in the industry already? Does this company have a strength in Abuja? Do I have a strength in Asaba? How can we collaborate to work with each other? Because when that happens, it helps to mitigate the shock, because the shock will surely come. Then my third advice will be to have what I call a backup approach. A backup approach in the sense that inflation may come, government policy may come. Aside the investment that I've put into the real estate already, if there's a currency depreciation, if there's a currency appreciation, there's a downturn in the market, what other market do I have outside Nigeria? For me, that's what led to investment in places like Canada and other parts of the world. So don't limit your investment as a millionaire to only Nigeria. Think about neighboring countries like Ghana and other economy, that if what's happened here, I also have another place to fall in. So in summary, diversify your investment, make sure you collaborate with others, and think beyond your immediate environment. Those are my 3 recommendations. Thank you.
Thank you so much, Moses. Thank you for spotlighting that 3 points. Again, speaking about diversification, you even need to know about the market trend before thinking of you want to diversify your portfolio. So that would take us to like the next question, which is around market trend. So this is for you, Imelda. How do market trend and economic conditions impact return on investment in real estate?
I actually was looking forward to that question. So, Nigeria is a classic example of how market trends has actually greatly impacted real estate. I mean, comparing just within the last 3 to 4 years, when I think it was last time on this show, on the same show, where I spoke about how people were buying properties in Lekki, on the Orchard Road corridor between Chevron and even down to, I mean, Lekki One Freedom Way. You could get a 3-bedroom duplex. At least I'm very sure that we had projects like that within our portfolio, and they were selling for 35 million naira. This was in 2020. Same area now, same corridor. You can't find anything. At least I think minimum you would find would probably be like maybe like an 85, 90 million. And that's not a new house, right? We have some projects selling in that same area going for like about 150 million naira. So where am I driving to? My point is that inflation, or Nigeria is greatly impacted by inflation. And inflation helps the real estate markets, because what it has done, or what it does, is that it makes the products skyrockets, price of products skyrockets, and real estate industry has actually greatly benefited from that in the last few years. And there's really nowhere in the world where you would have that margin in terms of returns in investments like you would find in Nigeria. And that's the major market trend that anybody who is looking to invest in real estate would or should look into or should look at. Now, another thing is that I always tell people that the real estate industry in Nigeria has just kicked off. And what I mean by that is that because of government policies, because of new trends, because of government impact now, there are now more areas that are opened. There's now more infrastructure, available in even areas that were upcoming in about like 2 years ago. Would say that some areas were upcoming, these are areas that I don't want to go to. There's now infrastructure going in those areas. And because of that, price of property has greatly increased, right? But these properties have not gotten to their peak yet, because the demand has just started, right, in those areas. And regardless of the fact that we would think that there are many housing projects going on, it has not met the supply yet. There's still a very huge deficit in the real estate industry in Nigeria, very huge. And this is the right time for any real estate or any investor to key into on a property. I mean, if you didn't do that 3 years ago when it was a bit cheaper, I think between now, this year and next year, one will want to do that early next year, because we're going to see peak prices even from this last quarter into next year. There's going to be more increase in prices in property, cost of property, and because of the current inflation situation in Nigeria, and which has also affected cost of construction, affected so many things generally. Because of that, we're going to keep seeing an increase in real estate markets in Nigeria. So this is one thing that a would-be investor should be looking out for and put into consideration when looking at investing in a place like Nigeria. That's why Nigerian real estate markets remains one market where the returns would always be high. Thank you.
Thank you so much, Imelda. Thank you for spotting out the new market trends in real estate. So over to you, Oluwakemi. I know she had mentioned some areas. Now the question is around how investors can leverage those market trends. So here's my question to you. How can investors adapt to changing market conditions to maintain return on investment?
Thank you for that question. So Imelda talked about what has transpired in the last 5 years, especially within the Lekki corridor. And true to what she just said, I mean, some 2 years ago, there was a development, a 2-bedroom actually, around the Chevron axis that sold for 35 million. I mean, 35 million. So if you just type on Google now that price of 2-bedroom within that same corridor, you would see something from 70 million and above, right? So that's a whooping 100%, right? So as time changed, every investor, to maximize your return, you have to have your eyes on the ball. So I also tell people that real estate is a serious business, right? I love how Moses tried to compare 2 regions and how he said after getting his hands burnt, he had to take it seriously. And he's looking at statistics, he's keeping his eyes on the trend. So there are trends that will be sustained for a while. And there are trends that will come and then go and then come again. So an investor, to maintain your return, you have to keep your eyes on the trend. That means you have to take real estate business seriously. I mean, that's where bulk of your money goes into as an individual, or shall I even say as a millennial, right? Most times, most of the time in a lifetime, your real estate investment is about the single biggest investment. That's where bulk of your income over a period of time goes into. So why not? I think it is worth paying serious attention to. It is worth paying attention to where your money goes into, and as I mentioned earlier, how your money will also come out, even if you choose not to exit that investment. So you have to keep your eyes on the trend. You have to keep your ears on the ground. You need to attend conversations like this. You need to attend fora where real estate is being discussed. Real estate is like the environment. We live in real estate. We move inside real estate. Without real estate, human being cannot exist actually. That's how I see it. So it is something that you have to be heavily invested in. Do your research, keep tabs on. If I check your notifications and I'm not seeing notifications on real estate, on trends that are happening in real estate, if I'm not seeing those notifications, that means you need to double up, right, as an investor. Even if all you own or all you aspire to have is just a home, you still need to keep your ears on the ground. There are places that people have bought homes and they really are not enjoying staying in there. They are not getting maximum return. Again, return on investment can be sentimental. It can also be monetary, right? So you need to decide which one you want. So for homeowners or first-time homeowners, what they are usually looking for is sentimental return. That, aha, I now have my own home, or aha, I'm no longer paying rent. So I call that sentimental return. Still, even if you're looking for sentimental return, you still have to keep your ear to the ground so that you will not go and buy a house and after some few months, you are not even able to live in there, right? And if you're gunning for monetary return, you have to take it very, very serious. Join fora, attend the event that talks about real estate. Even if for the first few attendants, you don't seem to understand what is being said, keep going, right? Keep going. With time, your vocabulary increases. With time, you get to understand such that you yourself can design your investment portfolio for yourself in real estate. Now, speaking to trends again, the statistics says that we have people between ages of 19 and 25 as I think 60% of the Nigerian population. Now, this set of people will soon be growing up into adults. I mean, proper adults. They will need homes. They will need homes. And if COVID doesn't teach us anything, it has taught us that our homes are very critical. Our homes are sacred. So, and the reason why you have more development, more people building homes, Imelda spoke to the fact that we have not even scratched the demand, right? Yes, people may say you have houses empty. It's because people have their investment goals, right? They are better off having their money in real estate because it can preserve that cash. She talked about inflation. Yes, I love inflation so much. Some people will say, oh, okay, if I invest in real estate, the return, inflation, and all that. But I also always tell them that, do you know that if you have that money in your account somewhere, you probably would have spent it, right? Or something happens and you can't really account for the money. But if it is in a strategic real estate portfolio, whether abroad or here, you would have been able to preserve spending it. You would have been able to keep that money away from it being eaten up by inflation. You would have hedged that money, right? And the appreciation of real estate even makes it increase. So you have to keep your eyes on the trend. You need to know what exactly is going on. You need to know what is happening. You need to focus on policies around real estate investment in wherever you choose to invest in. There are a lot of policy changes and shifts happening right now. So to maximize return on investment, you need to keep your eye on it. I attend a lot of fora set up by Lagos real estate, by Lagos state government rather, because that's where most of my investors are investing in, and that's where our focus is in. So I attend almost all of the fora. I'm on several groups. because we need to keep abreast what is going on in the market so that we can catch the trend or even create the trend. Yes, it's possible to create trend. I mean, so I think with that, yes, an investor will be fine once they can keep their eyes on the trend. Thank you.
Thank you so much, Oluwakemi. Thank you for that robust answer. Now, I didn't even realize we are almost exhausting our time. So let's just quickly go around the room. So this is going to be like a 1 minute question. I just want to know, what is your last advice to someone starting out his or her real estate journey today, and even to people who have been there? What is that one thing you want to say to them? So I will start with Fatima.
Thank you. First thing first is real estate can start small. I'm sure most people are wondering, they've heard prices, people talking about 35 million, 50 million, and they're wondering, I don't even have half of this. You can start very small in real estate. You can pull resources together. You can start with REITs. You know, one of the things that every speaker has said is strategy. When you're going into real estate, you must have a real estate strategy. What entirely do you want to achieve? What is your motive? Do you just want cash acquisition? Do you want capital acquisition? So first thing first, understanding your strategy and starting small. Sometimes you can only invest in REITs. There are private REITs, there are public REITs in property where you can invest your money and watch it grow. There are some people too that also do development, and you partner with developers that do off plan. It means that you can buy a property while it is still under construction and you can spread your payment. So, for example, if the property was going for like about 30 million and he has a 12 months construction span, you can begin to pay in bits if really you are, because sometimes people find it easier to pay for property in bits than that bulk sum. And eventually, some of them even buy it, not necessarily to own it. I know some people who buy off plan just because they want to flip it, not necessarily because they need it. So they pay the initial deposit, and as soon as they begin to pay, before the expiration or the construction period, the price would have gone up. So initially, the developer starts about 30 million for a 2 bedroom. By that time construction is ending, the property might have gone to about 50 million naira. So if I had invested and I had paid in off plan and I've been paying it by the time I'm selling to whoever is buying at that point in time, I've made over 20 million naira. So again, it's also ensuring that you listen. The last speaker said it. Every avenue where discussions on real estate is going on, please always ask. What happens is that your knowledge becomes wider, your vocabulary becomes larger, and you'll be able to understand and know where to pitch your tent. Sometimes, like you said, like Mr. Moses said, even real estate is not all about competition. Not that I want to get there. Sometimes you find that leveraging on people's knowledge or leveraging on with other people in real estate can give you the right returns on investments that you want. One, you need to learn. It's not just about building properties in locations, because for you to get high ROI, there must be an imbalance in the demand and supply. As far as an imbalance, you need to understand. So watch trends. The infrastructural trends to also show you where real estate is moving to. Everybody, and those that I said earlier, had moved to the Lekki Ekpe corridor. I'm sure several years ago when they were buying, people were wondering, why are you buying into bushes? But because people already understood government's plan in those areas, if you get to some areas in Ikorodu now, where the Fort Mainland Bridge is located, I can assure you that to get land now is like looking for a needle in a stack. They'll be calling prices that you'll be wondering why this is going, because people are following trend. The Abuja Kaduna Railway too. You find that corridor, people are moving and are getting accommodation. So ahead of time, if you already have the right information, it helps you in projecting. You can lock down that area, do land banking, and like everybody has said, not just land banking blindly, but in areas where there are already talks of infrastructural development, so that when those things begin to happen, you've already established yourself in there. So those are that I'll mention that you look at. Thank you very much.
Thank you so much. Thank you, Fatima. Thank you for pointing all of that out. I would like to call Moses to also like give out one advice. Make it real brief because we are running shortage of time. Thank you.
Thank you so much. I think Fatima have said it all. I just want to mention that before I bought my first car, I have built my first house. And the beauty about real estate is when you start, you keep going. So my parting words is just to advise all millennials to act. And for me, my ART acronym just stands for acquire knowledge. Don't go into real estate without learning about the property laws, the title, the market trend. Learn before you go into it. My C stands for choose smartly. Talking about potential income, talking about return on investment, talking about the property, always know that information is key. For instance, if you are talking about short let within Lekki, you have a very good return on investment. If you're talking about land banking, you focus on areas like Ekpe. So what is my strategy? Choose smartly. Then finally, take action. Don't wait endlessly. The best time to invest in real estate, to me, it is now. Many who bought land in Lekki area in Beju Lekki area in 2015 at 2 million, value is about 20 million now. So don't wait. If you wait endlessly, you won't get results. Action beat hesitation. Delay often meet higher costs. So act now. Thank you.
Thank you so much, Moses. Thank you for that brilliant advice. Now, over to you, Imelda. Let me just deviate a bit from the question. So I would like you to debunk one myth about real estate today. To our listeners, what is one thing that you want them to stop believing about real estate investment?
Oh, okay. I already had my one-liner. Okay. I mean, so for me, right, when I hear people being scared about investing in real estate, I mean, all I can say is that real estate is very interesting. I made all my money in real estate. I can't think of any other thing. I mean, anything else I can do aside from real estate. And that's how sweet real estate can be, right, as an investor. Another thing I could say is that the truth is that in real estate, of course, there are risks, right? But if you take there are risks that you can mitigate, you can get around with. It's not a death sentence. It's not that you always fall into the wrong trap. Yourself, with your knowledge, your understanding, asking people the right questions, doing your own research, looking for the right people to work with, you can always scale, with real estate. So you need to drop the fear. You need to drop the mindset that, oh, they are all scammers. They just want to take my money. I mean, because in any business, there are downsides and there are always going to be some people who would not run it properly. This doesn't mean that those products are all generally bad. So just look out for the right people you can invest with or work with. Another thing I would like to add quickly is that your first property does not have to be your home. In fact, many people who have made it in real estate, made it big, were living in a rented apartment and they invested greatly. You see them buying into every real estate development every off-plan project that was coming up. They were keen into it. I have clients who bought in not more than 5, they would buy in like 5 different off-plan projects at the same time. And they are like, see, I've not bought my house yet. All these are all investment strategies. They are building equity to buy the home that they want, building leverage, and then also gaining assets, building assets also, and generational wealth, as the case may be, before they buy their home. So your first real estate purchase does not have to be your home. In fact, I would advise that it shouldn't be your home. Rather, invest that money into something that would, and a real estate portfolio that will give you additional income and that can help you get your home at the end of the day. So that's it. And just like Moses has said, start, speak to us. We're millennials, and I mean, we're a testament that real estate works. So thank you.
All right. Thank you so much, Imelda. Thank you for being a testament that real estate work. And thank you for that advice. Now, lastly, over to you, Oluwakemi. What is one advice that you have to someone listening to us today?
Thank you very much. Thanks everyone who's spoken. So not to overflog what has been said, I would say know yourself, know your wealth stage, right? And as you're gathering knowledge, start acting, right? So real estate is very interesting. I mean, very interesting. And I should also warn you that if you get immersed in it, you can get addicted to it. Like Imelda said, you really can get addicted to it. I'm addicted to it. I know people that are addicted to real estate. So once you can get it right, you get addicted and you start enjoying it. So you can make mistakes here and there. It's okay. It's fine. It shouldn't be the end of the world. Just learn from those mistakes. Ensure you learn from those mistakes. If possible, document what you learn, document your experiences such that you can pass it on to the children, right? So I also encourage millennials that as fast as possible, as much as possible, and that's even put pressure on you to start learning. Pass all this knowledge to your children. That's how to build legacy. That's how to get them immersed into it such that whatever you may have amassed, they can protect it, they can guard it, they can grow it, they can multiply it, and even pass it on to generations to come. So I actually authored a book where I document 10 mistakes that each investor can avoid, regardless of your level, right? And it started from when I had my first investment. I bought some acres of land and I couldn't access it. And, I went back and I said, wait a minute, why did this happen? And I saw that, oh, I didn't know Jack. I didn't know Jack. I just had come and buy, it's cheap. And I bought it, right? So start acquiring as much knowledge as you can in real estate, right? And with knowledge, with adequate and right knowledge and application of it, you most likely will be able to mitigate or reduce your risk. Thank you.
Wow, we've had an interesting conversation today. Thank you so much, Imelda. It has been so enriching and so insightful. I want to say a very big thank you to our brilliant speakers for taking our time to, break down this big topic as big as real estate is and making it feel so real, so relatable and practical, from uncovering the smart ways to spot investment opportunities to showing us how patience and strategy can turn property into profit. Today has been an eye-opening, and I want to say a very big thank you. Thank you to our amazing listeners. Thank you for, taking our time to join this conversation. And to every millennial listening right now, real estate isn't just for the wealthy. It's for those who are bold, curious, and those who are ready to start small and grow big. I am Ethel Adonu, and it's been an absolute pleasure moderating this section today. Thank you, and until next time, keep dreaming, keep daring, keep, improving, and most importantly, keep investing in your future. Thank you and have an amazing day.